Hey everybody, morning. Once you know it, I had everything up, go in the other room, come back in here and installed a Windows update and messed everything up. Freaking what the fudge, man. Windows updates, the bane of my existence. I just can't keep anything going for those freaking things. Oh, bear with me just a second. I'm trying to find the window that I had up to talk to you about. I don't know why they're gonna just decide to reboot your computer. Whatever. Whether you want to or not. All right. Got this baby right here. Check it out. These are Japanese bonds. All right. Anybody remember what I've talked to you about? How treasuries and bonds and all that stuff, the auctions work, right? It's not that people are bidding the price up. All right. We're not bidding for the bonds to go up. It's when there's no bond buyers, they have to raise the price to try to attract buyers. So this is a big, scary problem right here. The last time we saw Japanese bonds kind of explode higher was like 1987. I was a wee little dude, and I don't remember that. I just straight up tell you right here. So we've got an issue, and let me see if I can pull some other charts. Yeah, right here, the 20-year. Look at this. Last time it was up here, 1987. That's October 1987. You remember what happened? October 1987. Big market crash in the United States. Guess what? Guess what? Conditions are ripe. We've been watching the NKD. Let me see if I can find another chart that might. Yeah, so this is basically the Bank of Japan has painted itself in a corner. Yeah, here you go. 20-year versus 40-year for Japanese bonds. Right there. And this could be kind of crazy here. This could be kind of crazy. So it's not the only thing, all right? It's not the only thing I brought, funny enough. Let me grab my other charts since it closed everything. Awesome. I love this. Love it. Let's see. Where is my other chart? Here we go. Here we go. Remind me later. Cool. So remember, hedge funds did this thing down here we talked about a couple days ago. Bunch of buying. Now look at this. Swung the other way. This is record shorts getting added. This is hedge funds short change. This is actually the dollar value of the shorts. You know, they were closing shorts, getting stopped out. Now, guess what? They went back in double. What do? You double down when you lose money to a short squeeze. I mean, we're not playing around either. This, like, look at this. Since the great financial crisis, they've never put $25 billion short against the market. Things are getting a little nuts, a little crazy. Let me see that I have another chart I'm trying to find. So that's definitely a little crazy. A lot of crazy. Might be something. And these are the risks, all right? The risks are kind of piling up. You know, could it all come to a head next week? I don't know. Like, I feel like it's my job to point out the things that nobody else is talking to you about. And there was one other spectacular one I wanted to pull up and talk about. right here. This is an unusual kind of event. And we have the VIX option expiration. All right, we are here in May. So VIX, the pink right there, the pink right here. Yesterday was the last day to trade it. Today it expires. That frees it up until, so we've got this whole chunk of month here down to the 17th, 18th of next month for VIX. You know, I was telling last week, early last week, I was like, we might not be able to break the market free until the opex, right? Well, usually it all happens in 1 week. We get VIX and then the main monthly opex. VIX, main monthly opex. This one, August, a little different. This one, VIX, then main monthly opex. This one different. This one, VIX and main monthly opex. VIX, main monthly opex. So the standard is VIX expires and then the main monthly options expiration. All right. This month we had the third Friday of the month was right here, but VIX needed to expire here because that's the third week. All right. It just has to do with the way the calendar hits. We got to have 3 Tuesdays of trading before we do the VIX expiration. So this possibly was why we didn't just break things free yet. Possibly we're waiting for this VIX expiration today. It'll be interesting to see if that's the way this goes, especially when we look at the overnight action. Starting down, kind of started to roll yesterday a little bit. I'm glad I bought June with my VIX. This guy right here also. Zoom her up, buttercup. Look at the tail. Right there, above 80. That was yesterday. If you don't remember, yesterday morning I was like, this thing might have to grind a little bit more until we poke above 80. We did that. We did that yesterday and then got a red day. Wasn't a big red day, but it was a red day. Now, S&P 500, we're already red on the futures. Do we retest and hold the roadmap lines area, or do we go deeper on down here? It's a good question, right? Good question. So we got the odds are stacking up against us here, or maybe it's the odds for a pullback are stacking up with us. All trading involves a substantial risk of loss. Past performance not necessarily indicative of future results. This presentation intended to be informational, educational, fun, entertaining, not a recommendation to be buying or selling any financial instrument, including stocks, options, bonds, forex, futures, cryptos, treasuries. Don't trade them, all right? You might lose money. This is a significant risk of loss. Substantial, right there. And if you want somebody to tell you what buttons to push, what trades to get into, what to do to make money in the markets, hire and consult a financial advisor. That's what you pay them for. It's not what you pay me for. You pay me, good, bad, or ugly, whether you want to believe it or not, you pay me for information, education, and entertainment, fun. You don't actually pay me to give you financial advice, right? That's not what I'm selling. So you may feel otherwise, but that's the way this whole cookie crumbles, all right? I'm not in the business of giving financial advice because I don't have time to look into your individual finances and do that. And I'm not registered to do that. So the financial calendar this week has been pretty benign. Not a lot cooking this week at all. I mean, we get our standard stuff tomorrow, unemployment and flash manufacturing and services, some home sales, maybe, we get new home sales on Friday. Maybe one of these is the cookie that, spoils the whole market, but, maybe it's the finger pointing, but the risks are stacked. All right. It's the things that the mainstream media will put a narrative to that make us potentially pull back. I'm trying to think of the word to say it. And, yeah. So popping back in, Yeah. Well, the government's been having to buy their own bonds. There's nobody like nobody's buying. The U.S. government's the main buyer of U.S. bonds. Everybody says China, but China barely owns 3% or something like that, and Europe owns quite a bit. Europe is the number 2 buyer behind the United States themselves. The United States themselves is the number 1 buyer, and that's kind of the ridiculousness of all this. Bank of Japan is the number 1 buyer of Japanese bonds. I mean, it's just like, how does this all make sense? It doesn't really. Like, you can't borrow yourself out of like. You can't go like, well, I'm going to loan myself money and use that money to pay my bills and then borrow more money for myself. And it's like, wait a minute. But that's how the U.S. government operates. And that's why I've been very concerned. And funny enough, yesterday I started seeing a bunch of threads about the fact that when we cut government spending, it's going to cause a recession. Who said that? Like a year ago, almost. I mean, amazing. Amazing. The reality of all this stuff finally hitting everybody. So, another narrative popping up that I saw, I do read alternative news because mainstream media is just full of bullshit. And another narrative popping up was the fact that Congress may keep this thing frozen until we do hit a recession so that they can ramp up spending and keep everybody happy, keep the party going. And that's another problem, right? Government spending needs to be cut. We've got to do it one way or another. Either it's going to be the biggest financial crisis in history, Greater Depression. Maybe it's that way either way. Maybe we cut spending and create some sort of Greater Depression just because government spending has been the crack cocaine that kept this party going. I mean, we'd still be in a recession from 2022 if not for government spending. That's the only reason GDP has been growing. The only reason. If you take out all the government spending, we've been in a recession. That's why when you look at the Russell, this is where 80% of the country works in these small cap companies. 85% of the population. This is a big giant correction that's probably going on down here. And we started that back here. The people are feeling the pain. Even though big tech, not really feeling it. And interestingly enough, big tech recovered pretty strongly, and then the last few days hasn't really been doing a lot. Like when you look at the Mag 7s combined, let's just do a little fun thing here. Apple plus Amazon. I probably should save this ticker. Oh, I need plus. Amazon plus, God, come on. Google plus Nvidia plus Microsoft plus, say that's 5. Tesla plus Meta. It looks a lot like the NASDAQ, right? We add that ticker on there. In the last few days, we kind of topped out back here and been rolling off. And big tech was a big driver of this recovery until we got to here on the what was that? 13th, 14th maybe? A week ago. Last week, been bleeding off. It's interesting. got to be careful. All right. This is a warning sign. This one's a warning sign. Both big market oscillators. This one's the fast one. This one's the medium one. The slow one, not a problem right now. This one's still fine. We can do a pullback and we could do a pop. It won't matter. It's just a giant coin flip. And just a giant coin flip right here. My funky coin. So that one not really telling us much. Looks like the market opened. Turned a little sour. So breaking it down. Everybody clear what we're expecting here. We've got the 15-minute roadmap line. That's where we are on the cash index. If and when we break that, we're looking at the 30-minute right here. If and when we break that, we're looking at the 1 hour down here. If and when we break that, we're looking for the 4 hour, and the daily just happen to be right in the same vicinity, almost exactly the same, right down here. And if we break that, we're probably doing the bigger 618 retrace I've been talking about for several days now, where we're coming down in here in this big potential zone. This would be the ideal place to pull back. And this could take well out into June or July to get down here. Could even take longer, and that's always possible. Could just grind. Could be a sucky grind of like that. I don't know. I've got my trades, my protection, banking on a fast retrace, but it might not be a fast retrace. It may be something stupid and slow like this. Always possible. Anything's possible. It's just what's probable, right? What's the most likely to happen? Most likely, we go down pretty fast. We came up pretty fast, took us about a month. Go back down pretty fast, take us about a month. That's kind of what I expect. I mean, this one, we started out up here in February. We're down at the bottom by April. Back up here mid-May. A month and a week, couple weeks. Back down here. Could take a month and a couple weeks. Then we rally on, baby. That's what I want to happen. But if we don't hold that spot, we might flush on down here sooner than later. Could be all the way down to about 3,800. Bottom of my target zone here. Keep coming back. Make sure you subscribe. We'll keep on top of what's happening here. Keep on top of it. As we get more information, we'll keep abreast of the situation. We're down to the 1 hour on the futures. If that doesn't hold, you can set your alert down here about 58.90 on the futures. If we start getting closes down below that, 4 hour comes into play. That's all the way down here, back to the middle of the danger zone, 57.20. That's about 200 points down right there. It can go pretty quick. NASDAQ, same situation, same sort of things. We're already below the 15-minute. Already below the 30-minute. We're almost about to touch the 1 hour. Watch for support. We could do one more bounce. It's always possible. But if we slice through, then we have the 4 hour, which is down here. That's about 1,000 points off of NASDAQ right there to the 4 hour. I would expect some sort of bounce off the 4 hour before we went on down further. That's just typically how it rolls. You can see we did a few bounces and then little pause and ripped on down when we were really flushing. So this is just my support resistance line. If you don't have it, you can click on my channel name down below me and go watch that video pinned to the channel. It's all about the roadmap line. And if you just want the easy button to put on a chart, links in the description down below. $5. $5. That's all it is. One-time purchase. $5. You can get it put on your chart. And Russell right here. I don't think any news has anything to do with anything. So bike trash, all the way back last summer, I outlined what the market was going to do. And several people will tell you, you can go watch my videos from last summer. But when we're back here, July, August, I talked about it didn't matter who was going to win the election. We were going to do this, and we were going to do this. It's just in the charts. So right now, it's a zone of ambiguity. I need this to happen in a 3-wave fashion. If we do this in a 5-wave fashion, then we do a 3-wave retrace to a 618, we're going to crash. And it's going to be nasty, and we're going well below 38. If we go up to a higher high right now and stop in this zone and turn down, that's the exact same pattern we did in 2007 when we started the Great Financial Crisis. And this will probably take us down to 2000 before we find a bottom. Maybe even 1500. Maybe like, no freaking way. Guess what? Yes, freaking way. So, I don't think Trump has jack squat to do with the market. I don't think anybody does. I think the market's the market. These price patterns, this is the hardest thing to do, is to ignore all the news and only focus on the price patterns and where they're telling us we're going next. So we have a risk right now. There's a giant risk. If we can thread the needle, do this correction, set up a 5-wave move up, 3-wave retrace, this sets us up to go on up 6,600, maybe even 7,000, pretty close, before we make the big top. Either way, we're close to topping out. Probably going to top out somewhere here. If we do this correction here, this might happen late fall, early next year, maybe first half of next year, and then start a bigger down correction. That's what it's looking like. One way or the other. We're going down. It's just a matter of, do we go up to all-time highs first, or are we already cooked? CL, hate to be the bearer of bad news, but it's kind of the way we're looking. Oil was popping overnight, got really spicy, but it rejected, breaking through that resistance one more time. I was really excited because UCO was looking pretty hot, especially in the after hours market. Look at that thing. Look at that thing. Look where we got up to. Holy moly. But then right back down. I mean, that's where we were yesterday. Right down here. After hours, it ramped up $2, or no, $1. A little over $1. Man, that's pretty spicy. $1.10. But alas, when the market opens, we're back down here. Wah, wah. So we need that breakout to follow through on CL, USO, the unleveraged way to play. Look for that to pop up here. CL is the futures, gives us more complete picture because it trades 23 hours a day, 6 days a week. Rejecting off of that breakout that we rejected over here. We rejected right here. This is the third attempt. What is that level? It comes from this May 2023 low right over here. Having trouble breaking back through that low. It was support, support, and support, and then now it's resistance. Gold, guess what? We're working the path. Maybe I should move these back over now that we've done all these. Pull this up like this. That went like that. This one, pull it back over. We did that very fast. Right there. Pull this one over. Pull it out a few days. That's where we're probably heading, right up here. I outlined this path a couple weeks ago. I'm going to keep these over here a little bit. So I expect hit a top right up in here, retrace, come back to the bottom, come back up, and then go down bigger. That's the expectation for gold. Coming up into that, yesterday we were at the first target. Today we're at the second target. We can hit, like, if you were in UGL trade, it's pretty much at the target. Right there, 140. Could we go higher? It's possible. Maybe 142, 144, maybe. Maybe. If you want the sure bet thing, there it is. We got the target. That was the 10% profit. BTC. This thing keeps getting everybody excited. And then right back. We need that correction. I'm just telling you. If we ramp this up right up here to 120 without doing a nice big fat pullback, this greatly increases the odds that this will be the final high and this will start crypto winter. Greatly increases the odds. We need a healthy pullback. I'm just telling you. Ethereum not really participating with Bitcoin. NKD, guess what? That Japanese bond stuff, I told you, if we start breaking down below the lows the last couple of days, signaling we're going to retrace deeper and take the United States market down with it. I don't know the story that they're going to put to it, but there you go. There you go. Dollar breaking back out of this little funky channel. Now we did poke out the top, so this is a poke out the bottom. If we take it back up here in the next day or so, cool. If we don't, we'll be back to test the lows. And if we break below this zone, we may take this on down to retest this area right in here, or head all the way down to the 786, which is down here around 95-ish right here. Now, it's interesting because the dollar looks ripe for a big bounce. But when you go look at the Euro USD like we did last night in 30 Minutes of Awesome, it looks like it go on up. It's on a path to going up to $1.30 to $1.40 over the next little while, which would not be this path. It would be the dollar going on down to maybe 90 on the DXY. There's the potential that we hold, but there's also the potential we go cruising right on down here. We're in a downtrend. We could rip this thing right on down here. So Mag 7 stuff, Apple not been doing much of anything. I have a hankering suspicion that we're going to make a lower low on Apple on the next market pullback. Since we're under all this resistance here for the roadmap line and the 618, this price action, not bullish, sets this thing up to potentially come down and make a lower low. Now we saw that on, which one was it? This one. This one made the lower low. It ramped up, turned down, made a lower low. Now it's starting to look bullish. Like this one may only correct to the roadmap line in a bigger market pullback. Hold in here and then go ripping. Microsoft already near the target here. We're already breaking up. 46 would be the upside. It does have risk to retrace back to the roadmap line, but that would be the upside right there. At 46, possibly even 500 over there. Sloppy. Amazon, this one also looks ripe for a lower low. Be careful. You can always fade me. I don't care. I mean, you can trade against me. Plenty of people make lots of money betting against me. Occasionally I'm wrong. That one, are we going to retrace bigger? Are we going to retrace smaller? Are we going to bust on out? If we get up to that 180 level, I'm going to chill out selling puts on Google for a little bit. Right now, I still think we're like, I think we're going up. I think we're bullish up to at least 180. Then we'll probably do a bigger pullback. I want to hold a higher low before we go higher again. So Meta, working on that breakout. It does have a risk to pull back again, but we did stop in a danger zone. We could go lower low. It's always possible. NVIDIA here. We're going to have to hustle. I got another show I got to be at here in about 12 minutes. So I got invited to be on Opening Playbook with Graham and Nate. So NVIDIA, potential to pull back here. If we can hold that, potential to go higher. Targets are up here, 161 to 169. Tesla, we're just grinding the danger zone here. We're in the bottom kind of third of it. Just poked up in here. I want to see this hit that 380 level, then pull back. That's what I was hoping for. Hope is not a strategy, but that's what I was hoping to see. And then a launch off. This does have a strong catalyst potentially coming up in June. And unfortunately, we had Jim Cramer last night saying how he loves Tesla, and that usually precedes some giant pullback. So be very, very careful. Our buddy Jimmy trying to screw us. All right. This is not today's list, I don't think. Yeah, it is. So since we have limited time, about 10 minutes left, I'll go ahead and hit the setups right here. These are my signature roadmap pattern. You know, I talked about going to the channel homepage, watching the roadmap line. This is it right here. Signature pattern. There's the high. Here's the low. This kicked off the potential entry right there. Would be the target at 36.63. And this is not the best. You know, these statistics don't even matter down here. So under 30 trades, doesn't really matter. Now, bigger picture, that's a bigger pullback. We have not hit that line yet right there. So there you go. SO, next one up. Got that high, we got that low. This did stop out on that low right there. Fired off the entry right here. Potential target 95 right there. This has all the stuff. Look at this. Check plus plus. More than 30 trades. More than 80%. Check plus plus. And profit factor of 2. I'll just go with the check plus because yesterday we had that WEC with a 4. That was a plus plus. This is just, I'm looking for more than 2. So this is another one. Looks pretty ripe. Now it did fail last time, as you can see. Are these without fail? No. 84% of the time though, this has gone on to make higher highs. And overall, for every dollar you've lost, you've made $2.12 if you've traded this forever. Most of us have never traded this pattern before, so starting out. But we have a good history of this being a trending ticker. That's what this is telling us. This ticker tends to trend, and this could be a nice potential upside. Looking for about a $9 or a $5 upside. It is pulling back a little bit, so you got a little bit extra gravy there. 5% upside right there on SO. SPTN. This is already in a trade from back here. This algorithm. Looks like, yep, right there. And just sideways chop. And that's what we're seeing in the limited statistics down here. So turn that off, get it out of the way. Come on, come on. The upside on the bigger picture, right up here, 2162. Now, my algorithm at Discord that produced the list for today found this short-term target. That close was the close above the 618, right there. Pulled back a little bit, and the smaller target is 2120 right there. All right. Looking through a few opportunities for the day. UNH taking another bath. As I talked about, I did expect this one to possibly fill the gap and then go make a lower low, maybe all the way down in the low 200s. Wicks, that's a rough chart right there. Rough charts. Let's see, that's low, that's the high, probably going deeper, somewhere down around 127 would be my guess. PANW, taking our trip back down to the roadmap line, that's has a big risk to come down quite a bit here. Similar to a lot of the Mag 7s, if this retrace, you know, just like the ES, we want to see it hold this area. If we get below somewhere down around 150, probably going lower low on this one. Lower low will be down around 135. I apologize for the emergency vehicle about to pass by. If you can hear it, I can hear it very loudly. TGT still grinding lower. Target still down there on target dog. And let's see what else we got. Anything good? Lowe's. Home Depot was coming out saying that they're not going to raise prices. They're going to keep with the prices they got. China won't matter. Potential for this to break on through the resistance zone and go higher. As I talked about, we're getting into bullish season for Home Depot. At least through August, maybe into the fall. At the current climb rate, that would put us just right here at a lower high. I don't know. Lowe's, on the other hand, looks a little more bearish, unable to break through the roadmap line. They might go revisit the low, the low on Lowe's. RTX, man, these gainers and decliners today not looking so hot. Wow. DY going crazy. CEP. Man, I think the world's burning down outside. QBTS popping pretty good. Yeah, be careful out there. ZS looks like we're gonna break out. FAS getting a grind. FAZ, remember, GS came back up pretty swiftly. Might need to revisit the roadmap line. JPM might need to visit the roadmap line. That means FAZ has the potential to get a little baby pop in here as those pull back. Maybe, you know, maybe we get a 20% upside, 25% upside. XLF would be what we're watching the retrace. Back down here, like that. And let's see, ARM, and just grinding the roadmap line, potential to come back down again. PSX. Yeah, there we go. I don't know. It's kind of a little bit choppy and tough out there, I guess you might say. As far as expectation for the day, I'll give you that here in just a second. I mean, kind of already know that I'm kind of expecting a little bit of a pullback, right? I mean, we've been talking about that for a while. And come on now, copy the link. Hang on, we have to do this whole thing here. I'm going to invite everybody to come join me on Zoom with Nate and Graham here in just a minute. There you go. It's the yellow line. No, it's the yellow line is the roadmap line. It's my custom indicator that I've been talking about. That yellow line is the roadmap line. And I don't even have it labeled here. If you want more information on that, go to my channel homepage or click the link in the description. Channel homepage, give you the code and everything for free. So expectation is to watch out for that bigger retrace. All right. If we bust back through the danger zone, we're coming back down here. That's the coming days. I expect a bigger retrace. Then we'll see if we hold. If we don't hold, we're coming on down here. That's kind of where I've been for the last few days. Starting to arc over. We could get something more deeper and sinister take place in the market. Hope everybody has a great day. I'll be on Zoom here in a minute with Graham and Nate. Have a great day. Protect your account. Nobody's watching out for you but you.